Hey there, I'm Marty Sakata, host of Resilient Alpha. You might know me from the Ivy Family Office Network, almost 3 decades of family offices and big shots collaborating on alternative investments, strategy, and good causes. That's the fuel for this podcast. Why Resilient Alpha? Simple. Why do some funds and managers crush it and others crash? We're cracking that code, redefining alpha, and bringing top brains to unpack asset classes and hot alpha ideas full throttle. Buckle up and enjoy the ride. Welcome to Resilient Alpha, where we're diving into the future of community development and economic equity with visionary leaders shaping tomorrow's landscape. Today, we're thrilled to have Bernel Hall, President and CEO of New Jersey Community Capital, NJCC, the largest community development fund in New Jersey. Bernel is a Harvard MBA managing $150 million. He has a bold 5-year plan to expand NJCC's impact nationwide. Bernel is driving innovative financial solutions to empower underserved communities, fostering economic stability and wealth generation. His leadership focuses on transforming neighborhoods through affordable housing, small business support, and equitable development, all while navigating the complexities of today's economic challenges. In this episode, we'll explore Bernel's forward-looking strategies for scaling New Jersey community capital mission, leveraging emerging opportunities in community finance and addressing systematic barriers to economic equity. From innovative investment models to the role of technology in community development, we'll uncover how Bernel envisions a future where underserved communities thrive. Get ready for an insightful conversation, capped off of a fun lightning round to reveal Bernel's perspective on leadership, innovation, and the path ahead. Let's dive in. The content here is for informational purposes only, should not be taken as legal, business, tax, or investment advice, or be used to evaluate any investment or security, and is not directed at any investors or potential investors in any featured fund or deals on this video.
Hello, welcome to Resilient Alpha, where we dive into the future of community development and economic equity with visionary leaders shaping tomorrow's landscape. Today, we are thrilled to have Bernel Hall, President and CEO of New Jersey Community Capital, or NJCC, the largest community development financial institution in the state of New Jersey. With a full 5-year plan to expand NJCC's impact nationwide, Bernel is driving innovative financial solutions to empower underserved communities, fostering economic stability and wealth generation. His leadership focuses on transforming neighborhoods through affordable housing, small business support, and equitable development, all while navigating the complexities of today's economic challenges. In this episode, we will explore Bernel's forward-looking strategies for scaling NJCC's mission, leveraging emerging opportunities in community finance and addressing systemic barriers to economic equity. From innovative investment models to the role of technology in community development, we will uncover how Bernel envisions a future where underserved communities thrive. Get ready for an insightful conversation, capped off with a fun lightning round to reveal Bernel's perspective on leadership, innovation, and the path ahead. Welcome, Bernel.
Thank you for having me, Lori.
Absolutely. Let's dive in. One of the things that's so interesting about what you do is how many people you must help, right? How many communities you must uplift. How many people you must, in their hearts and minds, providing hope and joy. So could you give us a little bit of a scope of understanding of what is the, NJCC? What's your mission? What is it? How is it going to expand beyond New Jersey?
Sure. New Jersey Community Capital is one of 1,400 CDFIs in the United States. We are based in New Jersey, but we operate nationally. As an organization, we're 36 years old with $700 million in assets under management. We are really focused on connecting capital to community in a way that creates more affordable and mixed income home ownership opportunities, small business growth, neighborhood development through community facilities, and as well as supporting educational opportunities for children of all backgrounds. We do this in 3 different ways. We have a lending platform that lends to real estate development organizations and to small business owners. We have a vertically integrated real estate development platform, which builds affordable and mixed income housing throughout the country, as well as a SBIC, or a small business investment company, which invests in small businesses, many of which are led by minorities and women nationally, to create jobs in the communities that need it the most.
Wow, that's fascinating. You obviously have had a lifetime of building upon this purpose. So it's great to hear, especially since I'm a Jersey girl myself from East Orange. I love when New Jerseyans spread out beyond the Jersey shores. Now, you recently announced an ambitious 5-year plan to become a national leader in equitable development. So what does this expansion look like in practice, and how will NJCC adapt its community finance model to serve diverse regions across the U.S.?
Sure. The goal here is to be a leader in community investment, and we want to do it in 3 ways. First, we really believe that one of the best things about what we do is that we are able to create lasting impact in a way in which we create a return to investors. Lastly, we really pride ourselves on creating measurable socioeconomic benefits to the communities, business, and residents that we serve. And then lastly, we definitely want to continue to be a great place to work for all those that work with us here in the New York tri-state area and beyond as we continue to expand.
Wonderful. How many people do you have on your team?
Currently, we have 65 members.
Wow. So you've talked about, we all see it around us that home and property tax appreciation is outpassing income growth, right? Creating affordability challenges. I believe one of the statistics is that, you used to be able to buy your first home at the age of 25, and now it's more like in your early 40s. It's moving very quickly to the age of 45, making it very difficult. So looking ahead, how can NJCC innovate to bridge this gap and make home ownership or stable housing accessible, especially in high cost markets like where we are? I'm well along in my career, and I only bought my first non-investment primary home 2 years ago.
Sure. Now, the price of homes to income ratio has been rapidly growing, as everyone knows. In 1985, the home price was roughly 3.6 times that of median incomes. Now that number in 2025 is 5.6 times as it relates to home prices versus median income. So it's clearly housing affordability crisis throughout the United States, both from a rental standpoint as well as a home ownership standpoint. The ways in which we tackle this issue is multifaceted. One, we tend to lend money to developers that are from communities like East Orange that are interested in investing in a place in which they've been raised and bred. And so in doing that, we have people that have local connections, which tends to help us from a political perspective, but also from a market research perspective, so that they know how to build on time and on budget. And they know how to really create a product that speaks to the community in which they built. We also tend to work very closely with existing organizations in the areas that teach about financial literacy from a first-time home buyer's perspective, as well as groups like the Urban League that actually have a certified training program for people to understand how to maintain a home at the purchase. Many times people rent and they are paying a rental rate that's nearly that of a mortgage. And so it kind of seems like they're doing exactly the same thing as a homeowner. But as a homeowner, there's additional responsibilities as it relates to upkeep, as well as property taxes, which can be a seismic shock to a person that does not have experience in owning a home. We want to partner with people that offer wraparound services to the financing that we tend to provide, so that not only can someone be given an opportunity to buy a home, but they will be given an education to stay in the home once they purchase that home.
Very important point, because there's so many unexpected bills that come your way, or taxes you didn't know about, etc., or just fees. And a lot of people can't really afford that. My friend bought a house in Newark, and all of a sudden she got a huge $1,000 a month bill for something like the sewer lines, and she was sweating it. But anyway, let's take a little bit of a pivot and talk about technology. Everybody's talking about AI. I think it's important that we really talk about the transformative power of what can happen with AI, data analytics, fintech, and how it transforms the way that NJCC can deliver on its mission in terms of financial solutions, its outreach to these underserved communities, even identifying where they are, who they are, what the specific needs are.
Sure. Now, AI gives us great opportunity to do what we do much more efficiently than the way we've been doing in the past. First and foremost, the ability to automate processes such as loan underwriting, market analysis, and obviously predictive data analytics in such a way in which we can really get a better handle on our borrowers, their credit history, as well as the probability that they will be a successful credit. Again, the other thing that AI, I think, brings to the table is really automating the way in which we build, right? Mm-hmm. So there's the generative AI that'll help to really speed up the architectural design process, project management as it relates to the construction timetable and cost associated with a particular development, as well as doing a lot of scenario analysis so that, as broader macroeconomic issues come up, such as tariffs, AI can help predict the impact of these macroeconomic factors in such a way in which the developer can plan accordingly and we can keep the cost of home ownership down.
Fantastic. So let's talk about wealth creation. I mean, generational wealth within underserved communities is just beginning, whereas it's been here as a standard for many generations for some people, right? So you focus on wealth generation of underserved communities. What new strategies or financial products is NJCC exploring to empower small businesses and residents to build long-term wealth in the coming years? Now, obviously, I'm a small business, right? And there's all sorts of small businesses. There's service businesses, there are product businesses, there's the just regular retail, the engine at the corner store. What are some of the things that you're thinking about?
Sure. I mean, there's the traditional debt and equity products, which we offer, whether it be working capital loans and or equity directly into a business. We tend to focus on those that have achieved profitability. So we're not venture capitalists, we're growth equity investors, but are well below what Wall Street would deem middle market size companies. So your EBITDA is much less than $50 million. And we again look for wraparound service opportunities, whether it be connecting small businesses that we invest in with B2B procurement opportunities that may be provided by the municipality or the state in which they operate, and they may not be aware of such facilities, and or really trying to connect some of our clients to other clients in a referral basis. Obviously, that's a sensitive matter because we can't speak for the quality of product or service, but we really do try to create community as it relates to the people we invest with and lend to.
Okay. So given your expertise in public, private real estate transactions, obviously you worked on both sides. What role do you see these partnerships playing in the future of community revitalization, and how can they be structured to prioritize equity over profit?
Sure. So prior to becoming president and CEO of New Jersey Community Capital, I was the president and CEO of Invest Newark, which is the City of Newark's Economic Development Corporation. And that tenure was marked by the creation of New Jersey's first land bank, which I think is a great example of a public-private partnership that creates wealth opportunities while at the same time revitalizing a city or a neighborhood that needs it the most. So in that scenario, the city of Newark, in partnership with the Economic Development Corporation, several banks, as well as some philanthropic organizations, dedicated unused and in some cases disparate parcels of land to the Economic Development Corporation that I ran. We, in partnership with 2 or 3 banks, worked to prepare smaller and local-based real estate developers and general contractors to take financing from us and to build for sale and rental housing opportunities in that city. And in doing so, we sent people who, in that case, were on Section 8 and had a voucher that would transition from a rental assistance voucher to a mortgage assistance voucher, and through a lottery and also through completion of a program with NACA, which is the Home Ownership Readiness Training Program, families were given the opportunity in completing the program to get a new home at about 80% of the normal market value. And the city also provided a 5-year tax abatement so that those families could ease into the scenario in which they started paying property taxes while they were going through a post-home ownership training program.
That's truly amazing, because when you're taking people who are obviously, some people on Section 8 are working full-time jobs, right? So, it's not that everybody is, taking free money from the government. They're actually working, contributing. They just don't have enough income, right? So that's really just fascinating. That program must have just, brought you many big smiles. With economic cycles bringing challenges like inflation and higher, interest rates. I mean, we're in a high interest rate time right now, but I always say when my student loans were at 14.7%. So I don't know what everybody's talking about. But anyway, how is NJCC preparing to support communities in the face of potential economic downturns over the next few years?
Yeah, we really moved away from a one-size-fits-all community investment strategy. And that's been both a product of exactly what you said, macroeconomic factors such as rising interest rates, as well as changing geopolitical factors. And so the way we're looking at it is we have really stratified our loan products for people who may be deeply lower incomes and are looking to start their first businesses versus people who own a business and the business has $10 billion of EBITDA and they're looking for capital, not necessarily capital that they're going to get from, private equity shop X here in the city, but a little more impact focused capital that, while still creating a financial return to us and our investors, it gives them the leeway they need to grow their business until they move to the next capital provider and take us out. That creates a recycling function, which we believe creates an opportunity for us to be profitable and sustainable, but also sustain our commitment to the communities and businesses that we serve.
Great. So a little bit about you. As a CEO, you've spoken about the importance of embodying an organization's values. Looking forward, how do you plan to foster a culture at NJCC that inspires innovation and resilience in your team to tackle future challenges? I mean, being a dynamic leader, having your team of 60 plus want to march along with you in this purpose obviously takes certain traits. We'd love to hear about it.
Sure. So it is a mix of a strong focus on accountability, both on the personal and individual team member standpoint, as well as an organization. We know that what we do is extremely taxing, both from an analytical standpoint, but also from an empathy standpoint, because we're working in communities of people who have, distrust and in some cases disdain for our financial system. And so what I really sort of preached and emphasized is making sure that we understand we have to be more than profiteers. We have to be compassionate profiteers. And in doing so, we have to understand who we're working with, both their aspirations from a financial standpoint, but also their aspirations from a cultural and a family evolution standpoint, and invest and lend accordingly. I also believe that, again, we have to work as hard or harder than some of our Wall Street companions. But at the same time, as a leader, I have to recognize that because there's this heavy pressure to perform in a way in which it's not just, making sure shareholders get the numbers they're looking for, but it also is making sure Miss Johnson gets to her new home. We have quite a bit of perks that speak to de-stressing the environments that could otherwise be really, really taxing. On Fridays, once a month, we have a masseuse come in and give the staff massage if they so choose. We celebrate birthdays, we celebrate work anniversaries, and we have outings together, really, again, to build continuity among team members, but also to sort of release some of the stress associated with the work that we do.
I'm surprised you don't have a basketball hoop sitting around.
We'll take that idea under consideration.
So in 10 years, what does success look like for NJCC in transforming underserved communities, and what key barriers must be overcome to achieve that vision?
Sure. If we can move the needle as it relates to the percentage of home ownership, specifically among people from overlooked communities, if we can move the needle as it relates to the percentage of small businesses created, as well as the revenue generated over the next 10 years, if we can move the needle as it relates to the wealth gap between the women and people of color and the majority, then, I can hang my hat and say I did a great job, as
Yes.
well as led a team that did an even better job.
Yes, the cheerleader and more. So just some quick questions. What is one emerging trend that you've seen in community finance you're most excited about?
Sure. ESOPs, or employee stock ownership programs, where, people who work in a private company, not necessarily a company that has stocks that's traded on various exchanges, have the ability to own a piece of that company as they work in place. I think it creates more loyalty to businesses that aren't traded publicly, but it also creates wealth while people are, obviously trading their time, their energy, and their intellect in helping the owner of the business's dream become a reality. Very excited about that.
Fantastic. What's a book or resource you would recommend to someone starting in community development?
Sure. Banker to the Poor, I think, is a really good book. It talks about a gentleman that started micro lending practice in India, which took off worldwide and is honestly the model that many of us use to this day in the United States and beyond. So I think that's a good place to start. And then from a interpersonal standpoint, I always ask staff to read The Four Agreements by Don Miguel Ruiz, because I just think going into that type of work with the perspective that you're going to be impeccable with your word, with the perspective that you're not going to make random assumptions, with the perspective that you're committed to always doing your best. And then the big one, the perspective that you're not going to take anything personal, is a must to be successful in community investment.
Oh, that's very interesting. Yes, absolutely. What's a technology you think will revolutionize how CDFIs operate in the next 5 years?
Sure. Predictive data analytics. We talked about AI earlier. Really using AI to be a cultivator of the exact right type of investment for a person that otherwise may be unbankable or not quite at an investment grade level as it relates to traditional private equity and banking standards. I think that has a great upside. Obviously, there's a lot that has to be learned as it relates to making it transparent and easy to understand how a decision was provided from artificial intelligence. But once we figure that out and we make sure there's no systemic issues associated with that predictive ability, then I think we got a great opportunity to do what we do at a much higher rate.
Absolutely. And it's speeding up very quickly. So next few months, instead of asking the question, they will be able to tell you some things unprompted. I mean, not unprompted, prompted, but that's where the future is going. So it's like, no fear. If you could collaborate with any organization or leader to advance NJCC NJCC's mission, who would it be?
Resilient Alpha.
Marty.
No, seriously. Mackenzie Scott obviously has gotten a ton of positive publicity for her super unselfish philanthropic investments and grants into businesses such as ours that seek to deal with some of these socioeconomic issues that we discuss. But there are millions and millions of other high net worth individuals that have the same values and are looking for the same opportunities and just don't know who NJCC and other people that do what I do, where we are and who we are and how to get connected to us. And so, working with a person like Marty that has this vast network and who, is well trusted and respected nationally and internationally with investors of all shapes and sizes is a huge opportunity for us and one which we really appreciate having.
So we all know that Lorraine Jobs, who is also a Penn grad, and I went to Penn, is also looking to do something similar to Mackenzie. So let's give her a message. Let's send her a message.
Sure. So first and foremost, I thank you for all the philanthropic work you've done in the past, Lorraine. And I welcome you to join us at New Jersey Community Capital at Making the World a Better Place. One investment into a family's dream at a time. One investment into a small business owner's dream at a time. One investment to create another unit of affordable housing or another seat at a charter school for a child that will grow up to emulate your success. We can give you that opportunity, and we can do it in a way that's sustainable and gives you a return on your investment.
That's right. Let's collaborate. What is one unconventional idea you would love to test to boost economic equity?
Sure. One of the things that the city of Newark, among others, this is actually not a new concept, I just add to it, but guaranteed income. One of the things that we've learned from economics, whether it be at Wharton or Harvard or in high school in some respects, is that, money travels, right? Circular. And so a lot of times we have a assumption that, guaranteeing income will just create, laziness or inefficiency. But in many cases, when given financial literacy, in addition to guaranteed income, people invest and they also tend to patronize businesses that are in their community, which creates more sales and property tax, as well as raises values in the community in which they live. So broadening that with obviously some boundaries as to how the money can be used is an interesting concept that I think should be explored more.
What is a daily habit you rely on to stay forward thinking as a leader?
Sure. I tend to listen to books on Headway or audible.com on a daily basis, exercise every day, and I'm an avid reader of news all over the internet.
In one word, describe the future of NJCC.
Positive.
Yes.
And I say that in the face of some of the geopolitical and microeconomic issues that people in my industry are concerned about right now. And the reason why I say that is because the people that we serve are resilient, and they actually really inspire us to come up with more innovative ways to connect capital to community.
What is a cause or issue you hope future generations will solve?
The wealth gap. Yeah, I think given the fact that it continues to widen, and you have places like New York where, housing costs are so high relative to incomes of people just coming out of college and even graduate school, having people, not even have the opportunity, if this so desired, to buy their first home until they're in their 40s. I don't think that's sustainable, and nor do I think that represents the American dream. I honestly think we need to find a way in which we're creating wealth for people at all ages and from all backgrounds, regardless of whether or not they had an inheritance to start or they were able to do it from scratch.
Right. And what is one thing you do to recharge and stay focused on the big picture?
Sleep. It wasn't something. I think this is my intro to middle age. I remember being in investment banking. You work all night. You come in and you shower, go home and shower, rest an hour, and come back the next day. I think sleep is underrated. And as you get older, you realize it more. When you start, running into blood pressure issues or things of that ilk, you start thinking to yourself, you know what? I'm better on a full battery, just like my cell phone.
Well, it's interesting because you brought up investment banking, and I am curious to know what drew you personally to community development finance.
Sure. So I am the youngest of 4, single parent home, trailer park in Eastern North Carolina. Grew up, poor, right? Low income. So I knew from playing Monopoly at age 9 that asset accumulation was the way out of the situation that I was born to. And so I just built on that interest, and as opportunities to learn more about how finance worked, how to acquire assets, and how to help others do the same, I continued to point my career in that direction. And that's how I ended up where I am.
That is truly wonderful, Bernel. This has been a pleasure to meet you through my good friend Marty Sakata and being here with Resilience Alpha. So thank you for your time and attention, and go learn more about Bernel.
Thank you, Lori.
You're welcome.